Dear students, today we will discuss about the ledgers. As I already told you, ledgers book which contains two things: classified, number two, summarized record of किसका जी? Accounts का. So ledger is a book which contain classified and summarized records of accounts. So you can memorize its definition for the ledgers. Next, there are two types of transactions. Transactions has two types: cash transactions and credit transactions. So in cash transactions, we are purchasing the goods, means we are taking the goods and giving the cash. In the credit transaction, we are taking the goods, but cash will be paid in future time. When goods are taken, but payment will be made in future time, is called credit transactions. So in credit transaction, there are two types of parties. One is customer, another is one is supplier. Customer is also called debtor, or you may call him receivable. Debtor or receivable and the customer are the same thing, and creditor, account payable, and supplier is the same thing. Seller, you may call supplier as seller. Supplier, seller, and trade payable and creditor are the same people, are the same parties. Basically, creditor is a seller. So seller is a person who is selling the goods, and customer is basically account receivable or the purchaser. So he is purchasing goods on credit. Credit purchases are those purchases in which goods have been taken but payment will be made in future time, and credit sales are the sales in which sale has been made but the payment will be received in the future. Now move another topic, which is an account. I already told you about account and ledger are the same things. Account and the ledger is the same term. Account and the ledger is the same term. First type of account is personal account. In personal accounts, we will record uh, personal accounts on name of person or company, or so accounts on the name of the person and the company are called personal account. It's very simple. Next we have nominal accounts. Nominal accounts are the accounts nominal accounts nominal accounts created temporary purposes, like discount account, salaries account, wages account, rent account. Primarily these are income expense. Primarily these are income and expenses accounts closed at the end of year. Okay, so students, temporarily created accounts are called nominal accounts. Real accounts are the accounts, those are, I already told you about the nominal accounts. So next we have real accounts. Real accounts are basically accounts for the fixed assets. Non-current assets mean accounts for the fixed assets like land, building, plant, machinery. And liabilities, there is no liability account, there is no such type of accounts. These are all, you may include these accounts in uh, any other categories. But as far as book is concerned, liability account records the loans and the overdrafts. Before moving further, I'm going to give another table which you can memorize for debit credit. Golden rules of debit and credit by Pakistan Academy. Debit things. Credit things. Cash inflow. Cash inflow is debit and cash outflow is credit. Purchases are debit. Sales are credits. Sales return are debit. Purchases return are credit. Expenses are debit. Incomes are credit. Drawings are debit. Capital is credit. And the last thing which assets increase debit, assets decrease credit, and liability decrease debit, liability increase credit. Now here one of the important thing which I'm going to told you, list of assets and liabilities. List of assets and liabilities. So list of assets and liabilities is concerned. Cash in hand is asset, cash at bank is asset, debtor is assets, account receivable is asset, and you may say bill receivables as assets, land asset, building asset, furniture asset, and land, building, plant and machinery. These are not the green plants, these are the plant and machinery of the factory. And goodwill, patents, copyrights, trademarks. So all these are the assets and you have to memorize all these things. When there is an increase in these things, this is going to be debit, and when there is decrease in these things, this is going to be credited. So you have to memorize, if otherwise you can't do these questions. So as far as liability is concerned, first liability is bank overdraft, then you have loan, then you have creditors, and then you have account payable, and then you have bill payable, and the last liability is major liability is capital. Major liability is capital. So when there is decrease, then liabilities are, then these are going to be debit, and when there is increase, these are going to be credit. If you will memorize this table, then I'm going to challenge that you can easily do first 3-4 chapters. So general golden rules for debit credit, memorize all these things, and then memorize the list of assets and liabilities. It is very necessary for you. It is very necessary for you. I hope you will memorize, and in the next lecture we will start the question. Hope for the best and stay blessed.